Imagine walking into your favorite coffee shop, ordering a nice iced vanilla latte, and handing over $6. Now, imagine the barista hands you your coffee, hands you back a dollar bill, and says, "Hey, thanks for keeping your money with us today. Here is some free cash." Sounds totally fake, right? But that is literally what your bank account should be doing for you every single month. Yet right now, if you're storing your cash in one of those giant traditional banks down the street, they're giving you a tiny fraction of a single penny while earning hundreds of dollars off your hard-earned money. Today we are fixing that. We're talking about high-yield savings accounts, or HYSAs for short. And by the time you finish this video, you will know exactly how to make your money work for you without taking a single financial risk. Let's break this down in plain English. Think of a savings account like a parking garage for your cash. You park your money there so it stays safe and ready whenever you need it. A traditional big bank is like a greedy garage owner. They charge you hidden monthly fees, and if you leave $10,000 parked in their garage for a full year, they hand you a nickel at the end of the year and act like they did you a huge favor. Meanwhile, while your car was parked, that garage owner took your money, lent it out to other people for car loans, mortgages, and credit cards, and made huge profits. They made hundreds off your cash and gave you back 0.01%. That is the actual average interest rate at traditional banks right now. 0.01%. That is not just bad, it is insulting. Now enter the high-yield savings account. An HYSA is still a parking garage, but it is run by a completely different company, usually an online bank. Because these online banks do not have to pay for thousands of physical brick-and-mortar branches, tellers, or fancy glass skyscrapers, they have super low operating costs. Instead of keeping all those savings as corporate profit, they pass the savings directly back to you in the form of higher interest rates. Right now, a good high-yield savings account will pay you somewhere between 4 and 5% interest on your money. That is literally over 40 times more than what big traditional banks offer for doing the exact same thing. Let us put some real numbers on this so you can see why this matters so much for your wallet. Let us say you have a $5,000 emergency fund. An emergency fund is just a stash of cash you keep tucked away for unexpected life stuff, like a flat tire, a surprise medical bill, or a sudden job transition. If you leave that $5,000 sitting in a traditional bank account at 0.01% interest for 1 year, you will earn 50 cents. Total. After 12 whole months, you cannot even buy a pack of chewing gum with your earnings. But if you take that exact same $5,000 and park it in an online high-yield savings account earning 4.5% interest, you will earn $225 in that same year. You did zero extra work. You did not sell anything. You did not start a side hustle. And you took zero risk with your money. You just picked a better parking garage for your cash. And now you have over $200 in free money for a nice dinner out or a weekend trip. Now let us level up the numbers to show you the real power of compound interest. Compound interest is basically when your interest earns interest. It is like a snowball rolling down a hill, getting bigger and bigger on its own. Suppose you were saving up for a house down payment or a new car, and you have $20,000 saved up. Leave that in a big bank for 3 years at 0.01%. and you earn about $6 total. That is practically tragic. Put that same $20,000 into a high-yield savings account earning 4.5% interest for 3 years, and you will walk away with nearly $2,800 in free cash interest. That is almost $3,000 just sitting there growing on autopilot. That is real money that can pay for your closing costs, your moving truck, or new furniture. At this point, a lot of people ask, okay, what is the catch? Is my money safe in an online bank? This is the best part. As long as you choose an account that is FDIC insured, your money is just as safe as it would be at any giant neighborhood bank. FDIC stands for the Federal Deposit Insurance Corporation. It is a government agency that protects your deposits up to $250,000 per person per bank. That means even if the online bank goes completely out of business tomorrow, the United States government guarantees you will get your money back up to $250,000. It is literally zero added risk for a massive financial upgrade. Another question people often ask is, will my money be locked up? Absolutely not. High-yield savings accounts are liquid. Liquid just means you can access your cash quickly whenever you need it. You could transfer money back to your regular checking account in a couple of business days whenever an emergency pops up. It is not like a retirement account or a real estate investment where your money is trapped for years. So how do you actually take advantage of this right now? Here are 3 simple steps you can easily do this week to stop losing money. Step 1. Check your current bank account's interest rate, which is usually listed as APY, or annual percentage yield. If that number starts with 0.0, it's time to move on. Step 2. Research a few top-rated, FDIC-insured online banks offering 4 to 5% APY with no monthly maintenance fees and no minimum balance requirements. Step 3. Open an account online. It usually takes less than 10 minutes. And set up an automatic transfer of even $50 or $100 to start building a new stash. Remember, this video is strictly for educational purposes and is not personalized financial advice. You work hard for your money, so make sure your money is working hard for you too. Pick a better bank, grab that free interest, and start snowballing your savings today.